Hello, great hosts. Today we're putting our focus on question 2 of this May-June 2024 accounting paper 1, and it specifically talks about our cash flow statement and financial indicators. So we are going to start with the concept, but please bear in mind that the question was 40 marks and 30 minutes. As I always say, that time is always key when you are doing an accounting paper. Right, so 2.1 says choose the correct words from those given in brackets. Write only the words next to the question numbers in the answer book. Do not find yourself writing the whole sentence. It says only the words. Right? So these are the types of mistakes that you need to most definitely avoid when you are doing a test or an exam. So the current ratio is a financial indicator which is relevant to the liquidity or solvency of a company. Remember that the current ratio, as soon as they say current ratio, they're talking about our current assets. So that's current assets is to current liabilities. All right. So this talks about the current assets and current liabilities, which focuses on our liquidity. So liquidity should be the correct answer in this first question. And then the second one talks about an increase in a fixed deposit will lead to an inflow or outflow of cash in the cash flow statement. Now, in this case, we are taking money from the business and we are depositing it with the bank, right? So we are basically investing it with the intention of earning interest. Now, if we're taking cash from our bank account and we're giving it to a certain banker where we're going to invest that cash, it is going to be an outflow. So this, in this case, it's an outflow. And then the last one says a decrease in the inventories will lead to an inflow or outflow of cash in the cash flow statement. So now, when we're looking at a decrease in inventory, when we're decreasing our inventory, it basically means that we have made sales. Okay, so if we have made sales, what we're going to receive is cash, and cash is an inflow to the company. Okay, so it's liquidity, outflow, inflow. Right, so here we go. Liquidity, outflow, inflow. We're done with the first concepts. And then secondly, what we're going to do is the retained income note. What I like to do with the retained income note is just basically fill in the structure. The retained income note is going to be forever like this. It will not change, not unless the examiner decides to do something different or they decide to put in something different. But as far as I know, the retained income note will always remain like this. The first thing that I recommend that you do is just come to your retained income note and put in the line items that you need to calculate. So here we will have our net profit after tax, and then here we are going to have our repurchase of shares. Okay, and then lastly, you know that we have two types of dividends. We can either issue dividends mid-year, which is what we call our interim dividends, or we could declare, dividends are not issued but they're declared. We could declare dividends on or at the final at the end of the year, which is our final dividends. Okay, so now let's have a look at our information and get to the question. So we're given information A, B, C, D up to F. Okay, so we're going to work with that information in order to fill in our retained income note. Right, when we look at our information A is talking about share capital. Information B, we're given information about the dividends. Information C, there we have our statement of comprehensive income. D, there's our statement of financial position. And then we have notes there that are going to accompany the statement of financial position. And then information E is talking about fixed assets, whereby we have a vehicle that was sold at carrying value and fixed assets that were also purchased during the financial year. And then F, we have a partially completed cash flow statement. So there we have quite a few amounts. If we could look, there's interest paid, dividends paid, and so on and so forth. Okay, so now when we're looking at our retained income note, what we are going to work out first is our net profit after tax. Now, net profit after tax is something that we are going to determine from our statement of comprehensive income. That's the first thing we're going to look at. Now, when you're looking at these different amounts, we're given depreciation, operating profit, interest on loans, and income tax. If you are confused, have a look at your income tax. We have 1,950,000. So now we know that we have net profit before tax, then we have income tax, and then we have our net profit after tax. So this is our end goal, but now what we are given is our income tax at 30%. So in this case, we know that this is 100, and then this is going to be 70%, right? So we're going to use what we want over what we know multiplied by the total income taxes of 1,950,000. Then let's quickly see what that will give us. That's 7 over 70 over 30 times 1,950,000. So that's 4,550,000. That's our net profit after tax. Okay, so it goes here, 4,550,000. That's our net profit after tax. Now we need to work out our repurchase of shares, and information A is going to give us guidance on the repurchase of shares. As you can have a look, we have our share capital, right? When we are reading the information, it says number of shares 1,450,000 were in issue on the 1st of March 2023. So this is our starting point or our starting date, right? And then secondly, it says 30,000 shares repurchased on the 1st of June 2024 at 3 rands 70 cents above the average share price, right? So it's 3 rands 70 above the average share price. Remember that the average share price is what's going to affect the ordinary share capital, but whatever is above the average share price is what we call the premium. And remember that the premium is going to affect our retained income note, right? So in this case, we do not necessarily have to calculate the premium because we have been given that it is 3 rand 70 cents. Okay, then let's take the working to the retained income note. So it's going to be 3 rand 70 cents times 30,000, and then that's going to give us, that's 111,000, and in brackets, because it's going to decrease our repurchase, it's going to decrease our retained income that we have reserved. Right, now we need to have a look at our interim dividends. So information about interim dividends, we're going to find it in information B. It says interim dividends were paid on the 31st of August 2023 to all shares in the share register. We don't necessarily need to worry about the final dividend because we're already given the amount. So when we want info about the dividends, specifically the interim dividends, we are not given any information about the amount that was paid, so we need to figure it out on our own. So when we have a look at the dividends that were paid from our statement of cash flows, if we have a look at this information, we can see that shares were dividends worth 5,728,000 were paid out. Now, if you could ask yourself, this payment is comprised of two things. First, it was a payment for the shareholders for dividends from last year. Remember that we have shareholders for dividends in 2024 and in 2023. Remember, Now, these shareholders for dividends for the current year, we are still owing them. They were declared at the end of the financial year, so they have not yet been paid. Now, these are the ones that we declared at the end of the previous year. So these were declared last year. Since they were declared last year, we are going to pay them this year. So it means that they are part of the 5,728,000. So this year we have paid the interim dividends that we don't know how much they are, and we have paid the shareholders for dividends from last year. Right? So now we can just simply take the 5,728,000 and then remove what was paid from last year, which is 2,320,000, and then we're going to be able to determine our interim dividends. So that's 5,728 minus 2,320, so then that's 3,408,000. Okay, that's our interim dividend. Then we just need to now sum up our dividends and see what we're going to have. So that's 5,746,000. Okay, and this minus. Then now we're just going to determine the total of our retained income note. Okay, and then I'm getting a total of 1,512,000. Right, so that is how you will need to approach your retained income note. So one challenging thing in this case was basically the interim dividend. So you needed to see how to get the amount for interim dividends. Okay, so now we're going to move on to the cash flow statement for the year ended 28 Feb 2024. Right, so there are quite a few items or a few things that we need to calculate. Let's have a look at the instructions so we can calculate the correct amounts. So we're done with the retained income note. 2.3 says refer to the partially completed cash flow statement provided, calculate and or provide the figures denoted by Roman figure 1 to Roman figure 5. So we need to calculate what is here. So this, that. So there's 5 things that we need to calculate. There are question marks also on those things, but let's just have a look at what those things are. So when we are looking at our cash flow statement, we can just fill in these line items that we need to calculate. Okay, looking at the structure of this cash flow statement, when we are going to have a look at these Roman figures, so here we're going to have taxation paid. All right, so that's taxation paid, and then we have cash effects from investing activities. So when we're investing activities, as you can see that we might have had some information that is telling us about assets. So remember that when we are investing in assets, it's basically an investing activity that we're going to show in our cash flow statement. So here, if we go back to information E, we purchased some fixed assets. So it does say that fixed assets were also purchased during the financial year. So we'll need to also calculate some figures with assets that we purchased. So here we have fixed assets purchased. And we'll need to do some workings here. And then when we move to Roman figure 3, so for Roman figure 3, we have financing activities. Financing activities, we're talking about the issue of shares. We're talking about getting a loan. It's basically how are we going to fund the business, right? So when we go to information A, just to confirm on our share capital that we did issue some shares on the 1st of November 2023 at 17 rands 20 per share. So now we're just filling in the structure, then we'll work with the numbers as we go. So here we have our proceeds from shares issued, Okay, and then Roman figure 4, remember that from our retained income note that we've just done, we were able to do our repurchase of shares, which is basically also an outflow of cash. So here we have repurchase of shares again from our financing activities. And then the last one, which is going to be our cash and cash equivalents at the end of the year. Remember that basically the cash flow statement is to calculate the key term, or the key principle of calculating our cash flow is to get our cash and cash equivalents at the end of the year. So here we're going to have our cash and cash equivalents on 28 Feb 2024. Right, now we'll shortly get to the amounts. We're going to start with our taxation paid. So for our taxation paid, we're going to get guidance from information F. Okay, no, that's not information D, which is our extract from the statement of financial position. And we're also going to have the income tax that we used in the statement of comprehensive income, information C. And we have an amount here. Okay, here we have an amount of 86,000. So the 86,000 is what we were owing last year, but we are necessarily going to pay it this year. And then now at the end of this year, we were owing SARS 115,000. So we need to determine how much have we actually paid, because we also need to take into account that we have incurred income tax of 1,950,000. So now let's look at this calculation. We had the 86,000 plus the 1,950,000. Let's say this is what we've necessarily paid to SARS, but now we have not paid the 115,000 because that's what we're still owing to SARS, right? So then let's determine what we have paid to SARS. So then here I'm getting an amount of, I think I'm missing a zero. So that's 1,921,000 in brackets, because this is supposed to be an outflow. Remember that we have paid money to SARS, so it's going to be an outflow. And then now, when we look at our fixed assets that were purchased, we are guided by information E. Information E here, we have fixed assets that were purchased. So we're given a hint, and we are also told that a vehicle was sold at carrying value. So there we would need to figure out the carrying value of this vehicle so that we remove it, and because that is the proceeds that we would have received from this vehicle, it's supposed to be removed, and then we can also be able to determine the fixed assets that were purchased during the financial year. Now, when we look at information D, our statement of financial position, what we have is our fixed assets at carrying value. Now, 2023, we had 39,365, which means it's our opening balance for this year, and we have 43,095,000, which is our closing balance for this current financial year. Right, now what you need to understand is the movements in between the carrying values. Remember that there's always depreciation and there's additions. After those additions, there is now your disposal. So think about the fixed assets tangible note, your tangible or fixed assets tangible, what's this, your fixed assets note. Yes, that's the one. Okay, English is dribbling me a bit, but now if we're going to look at these two amounts and considering also the depreciation that we were given here, we would then be able to figure out the amount that we are needing in terms of our fixed assets that were purchased, right? So we're going to start our calculation in reverse. We know that our opening balance was our closing balance rather was 43,095,000, and then now we had a vehicle that was sold at carrying value. So we don't know what the carrying value is, but if we could look at our statement of cash flows, the proceeds that we have received from this sale was 232,000. So we know that the carrying value was 232,000. So what basically happened is that 443,095 is equal to the 39,365, okay, minus the 232, right? That's what we have sold. And then minus the depreciation of 1,620,000. Okay, so those are the amounts that we have taken into account this year. And then we have additions of plus x, and then now we're just going to take everything onto the other side of the equation, or of the equal sign, and then we're going to have 43,095, and then we're subtracting 39,365, and then we're going to add 232, then we're going to add again 1,620, and then we'll be left with x. Okay, let's quickly see what that gives. Minus 39,365 plus 232 plus 1,620. All right, so here we are going to have 5,582. Right, let's just take our working to place that is a bit neat. All right, so I'm gonna try and resize this. So this is our working, right? So that is what we have. Let's just have it as big as we can. So it's 5,582. Right, so this is what we're looking for. So it's 5,582,000. That's our fixed assets that we have purchased this year. Okay, and remember that it's also supposed to be an outflow because we've used cash to purchase these number of assets. All right, so then what we are going to look at now is the proceeds from the shares that were issued, but that is given in information A. It says shares that were issued on the 1st of November were 17 rands 20 per share. So at 17 rands 20 per share, and we've issued 250,000 shares, we are going to have this. So it's 17 rands 20 times 250k. So it's 1720 times 250,000. That's 4,300,000. And that's basically an inflow. And then we don't need to put any brackets there. And then repurchase of shares, we already have an amount from our retained income note. Remember that this is just only the premium. We didn't repurchase the shares for a total amount of 370. We purchased them at 370 plus the average share price, right? So the 370 was the amount that was above the average share price. So now we would need to find a way, or we would need to find the amount of these shares that will affect our ordinary share capital, which is basically our average share price. And then now let's figure out a way to do that. So we know already that it was 30,000 shares, okay? But the average share price before the repurchase of these shares, we're going to calculate it as the average share price being equal to the ordinary share capital over the total shares in issue. The ordinary share capital, we're going to get it from our statement of financial position. We know that our opening balance was 22,910,000. So that's going to be 22,910,000, and then divided by 1,450,000 shares. And then let's see what that is. So then that is an average share price of 15 rands 80. Okay, so that's 15 rands 80 at an average share price. So that's plus 15 rands 80 multiplied by 30,000 shares that were repurchased, plus 111. This is 111. Okay, so then that's 585,000. It's an outflow because we have paid for these shares. We have paid for the repurchase of these shares. If you're confused, once again, the ordinary share capital is what we're using to calculate our average share price. It's our ordinary share capital divided by our total shares that were issued. So our average share price, we're calculating it the moment before we do the repurchase. Okay, so that's before we've done the repurchase, we determine our average share price. Okay, and then now we are going to have a look at the next line item, which is our cash and cash equivalents. So for our cash and cash equivalent on the 28th of Feb 2024, when we go to our statement of financial position, we can see that we have had cash and cash equivalent of 55,000 at the end of the year. But also when we turn our attention to the current liabilities, we can see that we have had a bank overdraft of 3,274,000. So this means that this is supposed to be negative. Okay, so in that case, we're going to have the 55,000 here. It is going to be 55k minus, all right, it's 1 million. That's 3274. So that's 3274. Right, then let's get the difference. So that's an amount of 3219, and of course in brackets. So that's our cash and cash equivalents in our statement of cash flow. So this is basically just part 1 of this video. In part 2, be sure to watch. I'll be working on the financial indicators, but for now, thank you so much for watching. Please don't forget to subscribe, like, share with family and friends who might be struggling with accounting. I'll definitely see you in part 2. Cheers.